All right, welcome back to another episode of the Aspiring VC podcast. Your host, Matt Snow with Mass Ventures here. I have the pleasure of speaking to Mac Conwell at Rarebreed Ventures. But Mac, before we do anything too serious, let's talk about coffee. Dunkin' or Starbucks? What's your pick?
Starbucks, of course.
Why? Of course. Why Starbucks?
They just have it's better tasting coffee. I don't know. Like I can't remember the last time I went to a Dunkin' Donuts and got coffee.
Well, as usual, I've got my Dunkin' iced with me today. It is the staple in Boston, but it's all right. It's all right. We'll give a lot of people prefer the Starbucks taste, so I understand. Let's all right. Let's go into a 2-minute summary. Tell me about yourself. Tell me about Rarebreed. How did you fall into this venture world?
Yeah, 2 minute summary. Software engineer, was a government contractor for a long time. Two-time founder. My first company, we sold the IP to a Fortune 100 company. The second one was a failure. So I'm a mildly successful entrepreneur. And then after that, I had a gap year where I worked at a marketing firm for a year and then found my way to the Maryland Technology Development Corporation, or TEDCO, which happens to be the investment arm for the state of Maryland. They're the largest funder of early stage tech companies in the state of Maryland and one of the largest in the country by volume. They do like 60 to 80 seed deals a year and 20 pre-seed deals. So I started there doing seed investments. I then led an initiative to create a pre-seed fund to invest in underrepresented founders. It's the first and only state-backed pre-seed fund for underrepresented founders in the country. That was fun. And then after working within a firm for 4 years, I decided to start my own. So last September, I launched Rarebreed Ventures, and that's how we get here.
It's awesome, man. Let's dive into a little bit Rarebreed. Let's hear the philosophy of the fund and how it's structured.
Yeah, so at Rarebreed, we invest primarily outside the major tech hubs, outside of Silicon Valley, New York, and Massachusetts. We invest pre-seed to seed, so anything sub 10 million post-money valuation. It's our sweet spot. We'll go higher than that for the right companies. We'll also invest in those other regions opportunistically, but the bulk of our deals will come from elsewhere. Our target check size is 250,000, so a little larger than what you typically see at pre-seed, but about standard for seed. We do invest in the range, but our goal is always to get to 250 between your pre-seed and your seed round. And we're industry agnostic. We don't do life sciences because I don't have a PhD. I wouldn't know what to do with a therapeutic, but we'll do just about anything else. But we care about two things. One, if it's a software company, we like to see a clearly repeatable or unique customer acquisition strategy. You don't have to have a lot of customers. You just need to know how you get your customers. And then we like physical products and consumer markets that have lacked innovation for 10 or more years. That's the overall thought process.
And you've explained some of this on the website that 50K isn't enough. Like a lot of these angel checks that these first time founders are very, very early angel pre-seed rounds get. It's not enough to get them across the finish line. And you also kind of strike me as almost like an institutional upstream version of the Revolution Rise of the Rest Fund, right? So like taking what they've done at seed and applying it to the pre-seed level. How do you think about that stuff?
I mean, that's essentially exactly what it is, right? It's the taking the very much the rise of the rest approach, or Paul Singh with the result junkies. Like he was really big early on, getting into Winnebago and just going all over the country and meeting founders. So that's pretty much what we are. We're doing what the rise of the rest is doing. We're trying to do it as early as possible. Sometimes we'll go pre-product, pre-revenue. Rarely, it's a rarity, but we'll do it for the right companies and the right founders. But we like to do this stuff really early and try to find the founders where others aren't looking. Granted, I will say with COVID, others are looking at places they've never looked before, since everybody's just in front of a Zoom. So that's been interesting.
Definitely, man. And one thing that I think is like underlooked is kind of the defense contracting and engineering work you did. And I think it's really fascinating that you started there. There's plenty of people that go into venture and then kind of spin out funds, but I don't think there's as many people that, one, would be serial entrepreneurs, but then two, actually have that really hands-on engineering, highly technical work. What do you think about kind of that time in your life and how it helps you now?
I mean, that's where I got to, cut my technical chops and figure out what kind of developer I am. I'm more of a starter or tinker. Like if you have a project, I can get you started and I can get you started pretty quickly. If you need to grow it and scale it and make it like super stable, like that can go to somebody else. And so when I worked for the government, I became known as the guy who would take all the projects nobody else wanted, right? Whenever there was a difficult client or whenever there was a project, a new project that didn't get started, I was always the guy to do it. So because of that, every project I worked on used a different language. right? So I got really good at learning other languages and stuff. So from a technology standpoint, it made me stronger there. But more important than anything is the student program I went through with the guy. Because I first got my intern. I first got my top secret clearance and got introduced to the government through a student program. And within that student program, the people I met there became like my core group of friends through my 20s. But these are all electrical engineering, computer science majors, right? So it's like these super uber technical folks. And out of them, there's one dude by the name of Patrick Jackson, who's now the CTO of a VPN company in California called Disconnect, who was like obsessed with being the black Mark Zuckerberg. Like that was his thing. He's the reason I learned PHP in MySQL. He's like, yo, Facebook's building the PHP in MySQL. You need to know this. He was the first person I knew who to build the iPhone app in like 07, 06 time frame, like really early days of it. And he was the first person I knew to quit his job, get funding, and move to San Francisco. Right. And so like him being one of my close friends, a group of us started to like meet together on a regular basis and talk to him about things. And a group of us spun off and started our own company. So we all figured like we're all engineers, we can build stuff. So of course we can start a company. I don't know if I do that if it's not for Patrick.
That's awesome, man. And like when you think about yourself now, you're a founder again for the third time, right? Because you're building out Rarebreed, you're raising.
Yes.
Yeah.
Oh,
And I know that on the Venture Unlocked podcast, I think you talked about, did you 10x your Twitter followers in like a 12-month period or something like that?
like 7 months. So I went from 2,500 followers to that was last June. Here we are in March, and I'm close to 3,000, 30,000. Right. So like in December, I was like 25, 26,000. And so yeah, that all happened really quickly and out of nowhere.
So like, how does this compare to, when you were a founder in the past? And obviously, what are the differences, because it is a different business model.
I mean, the first difference is when I started my first company in 2010, I didn't know what a startup was or what a VC was. Like I didn't know any of this shit. Like I didn't know nothing. So this time I know all this stuff. I have the industry, I have industry contacts, I have industry connects, I have friends, I have mentors, like I have all these things starting out. So that's made a difference and that's been really helpful. Um, but it's all still really hard. Like I told myself I'd never start another startup again. And like here I am starting a venture fund, which is essentially a startup, really, at this point. People ask me, what's it like pitching? I was like, it's like being a pre-seed company with no traction. That's what pitching is like for a first-time fund manager with limited track record, right? So but the community and the support's different. I mean, I have a full team who are all working for free, and I'm like, y'all know I can't pay you, right? And they're like, yeah, it doesn't matter. We're all here. Rarebreed, let's go. And I'm just like, well, this is awesome. Where was this before? Like, I might be rich right now if I had this for my startups. So the support and all the knowledge I have now gives me a lot more confidence compared to when I first started.
Yeah, and so like I guess along that line, it's there's an element here of community building, right? And like and garnering like this tribe and kind of, I guess you hashed out kind of the thesis of what you wanted in your tribe, both of the founders and then the people on your team, and then at some point there's this inflection where they just start finding you. Do you think it's just from the persistent communication, or what else do you think is kind of drawing that?
Yeah, I think it's from the persistent communication. The Twitter's had a lot to do with it, and I've I've put out the ethos of what Rarebreed is enough that people who it resonates to, they're just gravitated to and they just want to be supportive. I've also spent a lot of time giving back and helping. I'm in the process of raising my first fund and I'm out here giving talks to aspiring VCs and other emerging managers about fund structure and financials and all that other stuff. And I've had people ask me like, shouldn't you be focused on fundraising? I'm like, yeah, I should. But at the same time, this is a pay it forward business. And like, I'm only here because of all the people who helped me get here. And so I always feel obligated to give back. And, I meet so many. And also, one of the things was I had a lot of folks when they saw that I was raising a fund reaching out to me looking for advice to help. And like some of the basics they didn't know, like, VC 101 stuff Or I'll meet people who don't quite understand the concept of venture, where people are like, yeah, we're all in for the founder. Like, yes, we care about the founders. The founders are the reason why we make the investments, especially at the early stages. But then I always ask them the question, it's like, so what happens if the founder leaves? You're still stuck with the company. Like, you don't leave with the founder, your investments in the company. So you still need to make that company work. So like, you can't be so wrapped up in everything you do is for the founder, because then you can get emotionally attached there. And if the founder leaves or gets removed, and that may have nothing to do with you, your investment's still in that company, right? Like, you still need to make that work. Like, understand your job at the end of the day as a VC is to make returns for your LPs. Like, all the other stuff we do is good and it's front facing, and we care about founders and what we do, but like, the fundamental job is returning capital. Like, never forget that. And I've just seen so many people who, like, just some of these basic pieces they weren't getting. So I was like, okay, no, let's try to put some more knowledge into the ecosystem. I know there's a bunch of other well-known and more well-versed VCs than me out there, but I'll just try to do my part.
No, I mean, dude, that's a perfect kind of segue into like why this podcast is here. We're trying to demystify for, there's a massive amount of demand for the jobs and the internships, and greatly more than supply. But with that, there's kind of a steep learning curve. And so trying to accelerate that and help people understand, what's going on here. And if they really want to do this, like, how can they do that? And so, I mean, this is a perfect time to discuss some of this. I guess first question is, what would you say for getting people to understand the importance of both sides of the ecosystem? So the LP side that allows this thing to exist in the first place, and then the founder side where the value creation accrues. And although a lot of the GPs and a lot of funds like to hype what they did, in reality it's the founders building these things. But yeah, how do you think about that kind of two-sided capital stack?
It's interesting, and like, entrepreneurs see us as having all the power in that dynamic, and then we see LPs as having the power in our dynamics, right? Especially if you have an LPAC where your LPs come together and they're regularly evaluating you. It's just like an entrepreneur having a board, right? And so the dynamics are interesting because you meet founders sometimes who are very dismissive of VCs, like, just give me the money. You're all sharks. You're not good for anything. Not understanding that, one, we're human beings too. And two, like, we're like, in many cases, like, yeah, some of this is our money, but the vast majority is other people's money, right? And like, just because you're building something doesn't mean you're entitled to other people's money, right? Like, don't feel entitled. Like, yes, there's all this narrative about what VC is and what it isn't, right? And really, at the end of the day, we're financial advisors for people who are wealthier than us in most cases. That's really what we are. Let's not get it crazy, right? Like, you'll go to your financial advisor and yell at them because Walmart stock's going down. Like, they don't like like they're the middleman. Like, we're middlemen. And so it's a really odd dynamic, because like, as a fund, you would never be that dismissive of your LPs, right? Like, that is just not the way those dynamics work. And so to have entrepreneurs who are the actual superheroes of this equation, right? Like, they're the ones who make all this stuff happen. For them to be dismissive of VCs and to treat VCs like pretty vulgarly sometimes, it's so odd to me. Like, I get it. There's some VCs out there that are jerks. They get on these power trips, but the vast majority of us aren't that. And like, what we do isn't, we're not just giving you money, and it's not like our money. So we can't just indiscriminately like, oh yeah, here's a million there, a million there. I like you, here's a million. Like, we can't do that, because I try to tell entrepreneurs also, like, as the GP of my fund, every time I write a check, this is my career on the line. Like, if I write you a check and you go to zero, that's one more X against me in my career. Like, I could end up needing a new career if this doesn't work out, right? And then like, or if something happens and you do something crazy, right? Like, if you end up in the headline somehow, or you end up getting sued and like some terrible allegation, like, all my LPs are gonna look at me like, how did you not know this person was a terrible person? Like, these are things I'm going to have to answer for that affect my salary, that affect my family. So like, we all need to work together. That's how this ecosystem works. and for the founders who get it, they get it. But there's so many stories out here of like, don't worry about your VCs, they're terrible, they'll sink your company. Like, yeah, there's some terrible VCs out there, but we're not all like that. It gets frustrating sometimes. And I'm sure some entrepreneurs are gonna hear this podcast, like, oh, Max a dick. I'm like, no, I'm a person. I'm
Yeah,
a person.
I think empathy is super important here in all of this stuff, and seeing. I think we live in a world in which social media has taught us to be divisive and go for these flashy headlines, and that can influence our thinking in general. But dialing back, taking a step back, understanding the nuance of people and companies and political issues and research topics. There's a lot of gray in the world, and understanding and acknowledging these things, and having empathy for other people is probably the hugest thing there, into not taking ridiculous views. Another thing that I think is probably hard to understand, hard to internalize about venture, that maybe some of these aspiring VCs should learn is, I heard someone say this cool quote once where it's like, this is the only area of finance where the security selects the investor. Everywhere else in finance, the investor selects the security basically whenever they want, in both buying and selling high liquidity in public markets. But that's not the case here. You have to win the deal. Like, how do you, when did that come clear to you? And what do you think it takes to get people to kind of really understand that?
Um, I don't know if it's ever become but so clear to me, because like the vast majority of the deals I do, it's not like I have to win, right? Like if I'm doing my job as a VC and people like and respect the work that I do, when I talk to them, they're generally like always excited to have me on their cap table, right? Even when I worked at the state of Maryland. And also I invest so early that I'm usually the first person to be like, hey, do you want some money? And people are like, are you serious? Like, you're not going to say no? You're asking me if I want money? So like, it typically don't have that. I think even more so now that I'm having my own firm, it's it's a thing where you do have to win deals, and I think I picked that up. Like, I mean, I already knew that to be a thing, but I think I really picked it up early last year when we were talking to a company out of YC. And, we had a verbal agreement, and I told them when we made the agreement, I'm like, look, I will invest at these terms, but I promise you, over the next 10 days, you're going to get way better valuations. You're going to get a lot of interest. Like, I promise you, this is what's going to happen. So if we're going to agree to this, I need you to sign this today. They didn't believe me, but they also didn't sign, right? And so clearly, 4 days later, their valuation had tripled. I'm just like, I told you this was going to happen. Like, how did you know? I was like, well, I've been around. I've seen enough companies. I've been through this game a couple times. Like, this is what's going to happen. But I'm still cool to put money in at the terms we agreed on. And then they came back around like, yeah, Mac, we got some way better terms from a bunch of other VCs, some more strategic people. So I don't think we're going to do this. And that sucked, which was terrible. But I learned from that, like, I could have been more aggressive and gotten that deal. Right. And so the amount of aggression that a VC needs to have to get in the deal they truly want to win is a lot higher than you could consider, right? Like the consistent staying in touch, the text messages, the WhatsApp messages, the sending funny gifts, like all like sending them funny memes, hyping them up on Twitter, like all of that stuff goes towards winning a deal. But I also learned, if you miss one, there's always another one right around the corner, right? So like we missed out on that deal, and like a week later got into a deal that we thought was even better, right? So people tell you like there's always a better deal around the corner. Generally speaking, there are times where like around the corner you'll go 3-4 months without seeing anything interesting at all. But that was the case where it was something more interesting. But I guess like that was the first real time it was like, okay, there's a real fight here, and there's a large fight, which is also why like YC companies are cool, but like give me a company out of St. Louis. I ain't got to fight nobody.
Totally. And like when you're coming in at such an early stage, like how are you understand, like what do you see in these founders that makes you realize that like they are part of this rare breed tribe? And what is that, that skill is very different, right, from this like growth equity series B investor that's diving into this SaaS model and how to get a 3x from there. But how do you, a lot of that is probably not quantitative, right? It's understanding people and markets and stuff, right?
Yeah, some of us is understanding markets, some of us seeing things that are out of the ordinary. You know, when you see founders early on with like exponential growth, that doesn't just like, wow, this is amazing. Or like there's one founder we invested in, and granted, he made it easy to make the investment because his growth was out of control when we got to it. He's growing by like 38% month over month for like 5 months straight. And it was like, wow. But more than that, it was like little things like they're a company that has a warehouse for their products, right? And so his co-founder was somebody who had already had a successful company and successful exit and basically used the product one time and loved it. And when he called customer support to say, hey, I want to give a great report on this product, he realized it was the CEO. He's like, hey, can I join your company? Right. So that's how he found his co-founder. Or at one point, he like living in his warehouse. He thought about a way he could make it more efficient. And so he convinced his co-founder and the rest of his workers to help him rearrange this warehouse over a 3-day period, right? While still doing the work they need to do. Now, mind you, his co-founder isn't the kind of person who strikes you as somebody who does a lot of physical labor, right? And like he convinced him to rearrange a warehouse over a weekend. And like this found like little things like that told me I got the sense that this founder is nothing more than a force of nature. Like he's the kind of person he just gets stuff done. People love him. Like, he's the kind of person who will walk into a meeting and walk out with a deal just because somebody really liked him, right? Like you don't see that every day. And those are little things, right? That's why it's always great when you get to meet founders, you get to know them. I typically tell people I'm gonna know a founder for 3 months or so before we make an investment. And so in that case, I got to know that founder for 3 months, know that 3 months period. I got to see all this work he was doing and all these different things that were happening, like all this crazy stuff was happening along with them getting good growth and traction. And it's like, that's one of the easiest investments I can make. Like, you're an amazing founder and you got great traction, sure. But in some cases, it's the way the founders think about the market, it's the way they think about customer acquisition and really caring about customer acquisition. I mean, one of the best companies I ever invested in is this company, Scholar Me. They help students plan and pay for college. Um, to this day, every member of their team talks to customers weekly. Every member on the team, including engineers, because he wants everybody to have an understanding of what they're building for their customers and what their customers' needs are. Because he feels like if you better understand the customers, you're going to build a better product that actually solves their problems, and it empowers everybody on the team to then share information about things they're hearing from customers and other features they feel like they should build along the way. And that's a powerful thing. Here's the crazy part about that. When I met that founder, he was 16. He is now 21 today. My team made that investment for the state of Maryland when he was 17. Because back when he was 17, I recognized he was one of the smartest people I would ever meet in my life. And like he's proven me right time and time again. So like those types of like these sometimes these intangible notes that you pick up on founders. And also I'll also say this, right? Part of it's pattern matching. But when people hear pattern matching, I think it's like this terrible word. Like, no, we're not matching for the way you look or the way you act. We're pattern matching for the way founders attack certain problems and the way their thought process is, which is the way pattern matching should work, right? Like, do I see a similar wavelength of thought pattern when I talk to this founder compared to another really successful founder, right? And so that's the kind of stuff I look for outside of, what are your traction numbers, what are your retention numbers, things like that.
Yeah, it's really interesting. I feel like there's two sides here, right? It's like one, like why are they in this area that they focused on and how well is that market in this business? But then this other piece is like, do they have what it takes to get VCs at the next round? It's not easy to get seed and series A and maybe once you have series A and you have traction, the growth equity will just come. But there's a lot of amazing founders out there that maybe don't really do well on selling and fundraising, and it really can hold them back. And that rare type of founder that has like all, the sales, the fundraising, and the technical or engineering chops in whatever area they're focused on, it happens to be a great market. Like that's, and like, is that the thing where even though you're saying it's 3 months to get to know the person and like have time on the diligence, do you feel like the ones that you backed, like, did you have that feeling in the first meeting in like the first 5 minutes, but then you waited the 3 months to verify that there was nothing wrong? Or is it like the feeling comes in the second of the 3 months, like evaluating them?
It depends. With some founders, like you feel it right away, but you have to double check, right? Because like that early feel is usually an emotional one, so you got to take some time to take that out of it. But more often than not, it starts off where I start off lukewarm about like, oh, it's interesting. Let's learn more. Let's dig in more. And the more I learn about it, the more I get to understand the market. The more I get to know the founder, I get more excited. Like to the point where like I can't get that company out of my head. Like when I can't get a company out of my head after like 2 months, it's like something's happening here. Like this, there might be something here. So it depends, but yeah, it's usually you get more excited because that's typically how it goes, right? Like if you're really excited in the first meeting, you probably start to cool off by the second meeting. If you're kind of cool at the second meeting, but you're intrigued, but you get more excited by the second and third meeting, well, then you're probably on the right track.
Definitely. And when you think about like, I guess kind of mirror image of that is like you pitch in LPs, right? And so how do you think about like pulling them in and developing those relationships over time?
Yeah, for us, it's interesting because we're building in public, we're able to publicly solicit the fund, and so we have this funnel of we have a lot of LPs or individuals. We're now starting to talk to more family offices, and now we're just at the beginning of talking to institutions. And for us, it's really been a lot of we built up a lot of interest around the fund and what we're doing in the community I built on Twitter. Now we're following that up with we've made some early investments and we're starting to show some of those investments are starting to do well, look really interesting. And so now that momentum swing, we're able to use that momentum to go into these conversations for larger dollar amounts. It's just like having a startup, right? We're going from a pre-seed company with no traction to, hey, we're still a pre-seed company, but now we got some traction and we got some interesting traction. And so then your investor profile changes, right? The more traction you get, the more momentum you get, the larger checks start to come around. So it's kind of the same thing. So I really kind of think about us the way that we run Rarebreed, almost like an e-commerce startup or like a consumer company, right? Like, how do we market this? How do we brand this? How do we get more eyeballs on this? And so far it's worked. I mean, we do email marketing campaigns to create a little sense of FOMO here and there. Like, these are companies we're investing in. Don't miss out. Our minimum check sizes are raising. So, those things have done actually really, really well for us.
And kind of last thought on that is where do you see like, I guess, where do you see the firm going in like, like fund 2 and fund 3? And then also where do you see the venture landscape going if more people like yourself that have a kind of unique angle and ability to build these funds start, keep emerging?
Well, I'll answer the second question first. And so I think we're going to see a lot more funds being created. We're seeing more and more funds being created every day. We're seeing more and more capital going in, and that's going to continue to go. My hope is as that happens, we're going to start to see more and more different approaches to venture and different models. Uh, Typical venture has a specific risk and return profile. I think it would be healthy for the industry to have multiple risk and return profiles within venture, and we're starting to see some of that. You see a firm like Colab Capital in Atlanta that does like revenue-based investing. Same thing with Earnest Capital. I'm still rooting for NDVC. NDVC is no longer making investments because the LPs aren't excited by their risk and return profiles have changed, right? But I think that's actually really healthy. And seeing firms like those be successful is going to be helpful for other funds to come in where it may be all traditional venture. It may be a hybrid of venture and some revenue based. It may be other forms of venture like right side capital. Their strategy is to do like 100 to 300 deals a year, right? But because of that, their risk profile is lower, but so is their return profile, right? But like that, I think that's healthy for the ecosystem. In terms of Rarebreed, the goal at the end of the day is to be a large multi-stage firm based here in Baltimore, Maryland, right? So when people ask me what's Rarebreed going to be in the future, I jokingly say NEA, but it's more likely to be closer to Greenspring. And I use both of those firms specifically because both of those firms started from and are based in Maryland. Well, NEA is not based in Maryland anymore, but it's from Maryland. They're a Maryland firm. The founders are from Maryland. Same thing with Greenspring. And so I've been lucky enough to have the family office of one of the founders of NEA be an LP in Rarebreed, which means the world to me. And Greenspring if anybody from Green Springs listening, I'm coming for y'all too. I need y'all's LPs as well. Um, and I jokingly say that, but honestly, like that's the goal, to be a large multi-stage firm that does both direct investments and fund-to-fund investments. So to be on the pedestals with a NEA and Greenspring, like that's the goal, right? I'm here to build a firm that's going to last, right? Like the next Bessemer, the next Novak Biddle, next NEA. That's what we're building in Rarebreed.
Yeah, it's really this, I guess, venture as a platform, and I kind of to flip the tables on what you're describing in the founders. For what it's, I view you as someone who will this platform into existence, and you've done it on Twitter. You're doing it in your fundraise. You're finding amazing companies, and you have now a tribe, right? You've got a tribe of founders. You get a tribe of LPs, and it's starting to be at the point where this machine is taking off and starting to compound and put value on all sides, and the sourcing, the fundraising, and it's all coming together. So, I think we're at liftoff stages, and really excited to see where this thing goes, Mac.
I appreciate that, Matt. It's been a lot of hard work to this point, and it's a lot more to go. But I'm enjoying every second of it, and I hope people view me as like one of those force of nature type of founders.
Absolutely, man. But all right, if you're ready, we can jump into some of my rapid fire questions here.
Okay, let's go. Let's do it.
First one, who's been one of your most important mentors? And the caveat is if you remember a quote or like a specific action that still kind of stands in mind today.
So the easy answer is my father, and I've talked about this on Twitter before, but there was a point in time in my life where I wanted to be a rapper, because like every kid wants to be a rapper, like a guitarist or something, right? And I'll never forget, my dad asked me the question. He's like, "So, who writes the checks for your favorite rapper?" And I had no clue, and I didn't understand what he was trying to tell me. And he's like, "Well, go figure that out." And what he made me realize is like, yeah, the rapper makes a lot of money, but the person who writes their checks, the owner, makes all the money. And I was like, oh, so ownership, that's where we need. So I was lucky enough to get that lesson very early on in life, and it's carried me through.
Yeah, that's awesome, man. Outside of Rarebreed, who is one of your favorite VCs? Could be another firm, or it could be like a specific partner at one of these funds that you just really love.
So I'm a huge fan of Samil Shaw. Like very early on, the way he built Haystack was amazing, right? Like he willed that firm into existence, and so I've always looked up to him. And I'm a huge fan of Elizabeth Yen and Hustle Fund. The whole Hustle Fund team. Like I tell people like Hustle Fund is kind of one of those firms that I look to and like I look for inspiration from. And then Marlon Nichols at Mac Ventures, which is odd. His fund's name is Mac Ventures. Marlon was one of the first Black VCs I ever met. He's a great mentor of mine. And then also Charles Hudson, like that guy's always there. Like I can pick up the phone and text that guy, and he's right there. And then Alan Hamilton, because she showed us that anybody with the knowledge, the grit, the hustle, the will can get there. Like really, when you think about it, Arlen and Samil's stories are really similar, just from two very different approaches, right? Like Arlen was homeless trying to figure this out. Samil wasn't that, but like he's grinding, going to every demo day, meeting every founder. Starting with like $1 million, $2 million fund to get to where he is today. So yeah, those would be some of the folks I look up to. And I know I gave you a way longer list than you asked for, but
no, man, I love that. Like, it reminds me too of I think it's Pejman at Pear started out like selling like high-end like carpets, right? And then but in Silicon Valley and was meeting all these VCs, and then was like, hold up, what are all you guys doing? I want to get in on this business. And I love those stories that are just so amazing about the people that that make it work, and then they just have that amazing kind of background and thought process that everything they do.
It lets you know it can be done. It's amazing.
Totally, man. And this is an easy one, but podcasts, books, and blogs, both venture and then kind of other sector or topic areas that you like. What do you recommend the listeners check out?
If you haven't read the book The Alchemist, it's a famous book. Go read that. It'll be good for you. As an entrepreneur, I always tell people go to the Lean Startup. It's a great starting point. Like even today, I still love that book. The Business of Venture Capital is the best book I've ever read on how to be a VC or like what VC is. It's basically a textbook, but like if you want to get into this game, go read it. You'll thank me. I promise you. Like those are like three at the top.
Yeah, I remember reading that and Venture Deals when I was getting hardcore obsessed. I was like, all right, if I really like this, I have to make it through this entire book and take notes and
Right.
start to understand what's. And I should have done this earlier, but let's just real quick. Let's make sure we hit on. You've a lot of these listeners. They're either early in their careers or they're still in college and they really want to break into venture. What do you think they need to be doing on networking, finding their passion, doing this for the right reason, not the wrong reason, and going after these internships and all that?
First and foremost, understand what venture is, right? Like if you're doing this because you want to help founders and support founders and be all about the founders, go become an executive coach, go become a life coach, go do that. That's all completely founder focused. The being venture, the goal is to find companies that will return capitals for your LPs. Never forget that first. Secondly, if you want to break in, be almost obsessively grinding on networking. Like network. Reach out to as many people as you can. Get to meet the people. Send the cold emails. Do the cold DMs. Reach out weekly if you need to until you get those meetings and start to build those relationships. Because whether fair or unfair, this industry is built on relationships. Start there, followed by how well you can generate deal flow and how well you can evaluate companies or evaluate markets. So I used to tell people, hey, as you're meeting with other VCs and building your network, you need to be meeting companies as well. And as you find companies you really like, start doing investment memos on a few of the companies as you go. That way, when you do make an introduction for a VC for the companies you truly believe in, you can always send along your investment memo. Well, if you're looking like being an analyst is the way to break in, instead of doing investment memos, you can do a breakdown on the industry. So if you give them an analysis of the industry while you're also passing them a company that's in that space. So let's say you found a great company doing NFTs. Do a breakdown of the NFT market, who are the players, where is it heading, and all that, along with the company that you're sending. That kind of information along with the company shows that one, you can meet companies and get deal flow, and two, it gives a perspective on how you evaluate and think about companies or a market, and those are things that will get you hired.
It's kind of, I've had another guest say you do the job to get the job, right? And so you just start doing this sourcing. And I was saying, I don't know what you think about this, but I was saying, look, if you're a young student, you really want to do this, take $500, go look at 20 crowdfunding companies that you actually think are decent at first glance, write a one pager on each, and then only invest in your favorite 2 or 3 of them, and then save the memos.
Yeah, that's a great way for you to start to show, like, as I would build a portfolio, or how I would construct construct the portfolio. This is what I would do, and this is how I would go about it, right? Like there's a tangible value to that.
Definitely. And I think this has been probably one of the best episodes I've had so far on discussing where the market's going and how these aspiring VCs can break in. One thing I want to add here is this outro that took from Tim Ferriss. Really love it, and it is, what is a purchase of like $100 or a couple hundred that has like had this outsized amount of like happiness in your life?
Outsized happiness in my life. $100, couple $100. Uh, when I bought my PlayStation 2, buying the PlayStation 2 and and getting to like spend hours upon hours upon hours on that thing, playing all my favorite games. Like, it's so sad that to this day I still play video games on my PlayStation 2. Like, my PS2 still gets run in my house because there's just certain games that won't play on anything else. It's like, well, my old school Dance Revolution, like when friends come over, we're still pulling out the dance pad. And this is what's happening, right? So like, yeah, outsized joy, video games when I was a kid.
I don't know if you're a Battlefront fan, but Battlefront 2 PlayStation 2 was the peak of the best Star Wars game ever, I think.
Absolutely, 100%. See, kids today won't understand. Like, you don't need great graphics. good storylines, and good. And as long as you're having fun, that's all that matters.
Exactly. Totally. And of course, we need promote yourself here, Mac. Where can people find you on Twitter and LinkedIn and all these other places?
Yeah, you can find me on Twitter at Mac Conwell, MacConwell. You can also check us out at rarebreed.vc. Anybody interested in becoming an LP, our minimum check size is 10K. If you go to rarebreed.vc, there's a button to click to become an LP. And I also got to shout out my pod. I am now a member of the Inside team on the newest podcast, InsideBusinessPod.com. It's the weekly show where we give practical advice to entrepreneurs, me and my teammate Liam.
And that's co-run with Jason Calacanis, right?
Yes, I now work under Jason, which is another interesting storyline in all of this.
Oh man, well it's amazing, man. I really I know you're crazy busy with everything going on, so I super appreciate you doing this episode. I think all the listeners, will greatly appreciate it as well, and I think all of us will be excited to track Rarebreed and where everything goes.
I appreciate it, man.
Looking to innovate, invent, and disrupt? We're your partner to fuel your growth. Contact us to learn more.